A few episodes ago, you learned a strange and wonderful trick. You cannot buy the S&P 500 because it is just a number, so instead you buy a basket that holds all the companies inside it. We gave that basket a quick name and moved on. But that basket is the single most useful tool in modern investing, and almost nobody really understands what is inside it. So today we open it up. By the end, you will know exactly what you are holding when you buy one, the different kinds that exist, and the one rule that keeps you safe. The basket has a real name. It is called an ETF. The letters stand for Exchange-Traded Fund, which sounds intimidating and means something very simple. A fund is just a basket holding many investments at once. Exchange-traded means you can buy and sell that whole basket on the stock market instantly in a single click, exactly like one ordinary share. That is the entire magic in one sentence. An ETF lets you buy hundreds of companies at once, as easily as you would buy one. Think about how strange and powerful that is. Without it, owning a piece of 500 companies would mean 500 separate purchases, a mountain of money, and an afternoon of clicking. With an ETF, you press buy one time, and you instantly own a sliver of every company in the basket. That is what people really mean by diversification, a long word for a simple, ancient idea. Do not put all your eggs in one basket. An ETF is that wisdom turned into a product you can buy before lunch. And it is usually cheap, because most ETFs simply track an index rather than paying a genius to pick stocks. They cost very little to own. That small difference in cost, repeated over decades, quietly puts a fortune back in your pocket instead of someone else's. Cheap, instant, diversified. That is why the ETF quietly became the default tool for ordinary investors all over the world. But here's where most beginners get tripped up. They hear the word ETF and assume they're all the same, all safe, all boring baskets of 500 giant companies. They are not. An ETF is just a wrapper. What matters is what someone put inside it. So let's walk through the main kinds, from the calmest to the wildest, so you always know what you are actually holding. The first kind is the one you already met. The Broad Market Index, ETF. This is the classic. It holds an entire major index, the whole S&P 500, or even the entire stock market, in one basket. This is the calm, diversified, boring in the best way option. The most famous example is nicknamed the Spider, ticker SPY, launched by State Street back in 1993 as the very first American ETF. Vanguard, the company built by Jack Bogle, offers its own version called VOO, famous for costing almost nothing to own. When someone says they just buy the index and forget about it, this is almost always the basket they mean. The second kind narrows the focus. The sector ETF. Instead of the whole market, it holds just one slice of it, one industry. A technology ETF holds only tech companies. An energy ETF holds only oil and power companies. A healthcare ETF holds only medicine and hospitals. This is for someone who believes one particular corner of the economy will do especially well. It is more concentrated than the broad market, which means more potential reward, but also more risk. You're no longer betting on everything. You are betting on one neighborhood. A close cousin lives one step beyond. The thematic ETF, built around a trendy idea rather than a traditional industry. An artificial intelligence ETF. A clean energy ETF. A space exploration ETF. These are the most exciting baskets on the shelf, and that is exactly why you should be careful with them. They are often launched right when a theme is hottest and most expensive, packaged to sell you a feeling. Sometimes the story is real. Often you're paying a premium for hype. Excitement, remember, is the emotion that costs investors the most. Then there are the calmer kinds, the ones nobody makes loud videos about. Bond ETFs hold not stocks but bonds, loans to governments and companies. They tend to move more gently and are often used to steady a portfolio when the stock side gets stormy. Dividend ETFs gather together companies that pay you regular cash just for holding them, popular with people who want their investments to quietly send them income. And international ETFs let you own the markets of other countries in a single click, so your money is not tied to the fortunes of just one nation. And finally, a warning, because you will see these advertised and they look thrilling. Leveraged and inverse ETFs. These use financial tricks to multiply the daily moves of the market, 2 times, 3 times, up or down. They are not baskets you buy and forget. They are short-term tools that can erase your money with stunning speed, designed for professional traders, not for someone building wealth slowly. If you remember nothing else about them, remember this. When you do not fully understand a product, the right amount to own is 0. So now you can see the whole shelf. From the calm broad market basket that holds the entire economy, to the sharper sector and thematic baskets that bet on one idea, to the steady bond and dividend baskets, all the way out to the dangerous leveraged ones at the far edge. Same 3 letters on every label, wildly different things inside. Which brings us to the one rule that ties it all together, the rule that keeps you safe for the rest of your investing life. An ETF is only as good and only as risky as what is inside it. The wrapper tells you almost nothing. A broad index ETF and a triple leverage single sector ETF are both called ETFs, and they are about as alike as a bicycle and a motorcycle. So before you ever buy one, you do the same small, calm thing every time. You look under the hood. You ask one question. What exactly is in this basket, and do I understand it? You started this episode holding a basket you could name, but not really see into. Now you can open any ETF on Earth and know, in a glance, whether you are holding the whole calm economy or a thrilling little bet dressed up in a fancy label. The basket was never the point. What is inside it always was. I'll see you in the next one. Until then, keep it simple and always look inside the basket before you buy it.